Good morning all of you. I am Parsuram Shukla, Running Associate Economics, KVS ZIT Bhubaneswar. Welcome to my economics class. Today I am with you all with my 9th video lessons in respect of Unit 1 of Class 12 Macro Economics. In this unit, I have already presented 8 video lessons covering all the important concepts and measurement of national income. If you have missed my video lessons, the link to all the video lessons are given in the description box given below. You can watch all the video lessons following the links. So today I will be discussing with you the chapter 9, Numerical on measurement of national income. The content to be covered in this video lesson: numerical on methods of measurement of national income. The learning objectives: at the end of this video lesson, you will be able to estimate national income using methods of measurement of national income. So the first method is value added method, and some worksheets you see. So in question number 1, it is related to numerical of the value added method. From the information given below, calculate value added by farm A and farm B, gross domestic product at market price and net value added at factory. These are the 3 things we have to calculate. So some of the items are given here: particulars and rupees in crores. So particulars are given by in this worksheet. In this question number 1, sales by farm B to general government, sales by farm A, sales by farm B to households, change in stock of farm A, closing stock of farm B, opening stock of farm B, purchase by farm A, indirect taxes paid by both the farms, consumption of fixed capital, sales by farm A to B. So you can see the solution. Value added by farm A, according to this worksheet or according to this question, so sales by farm A plus change in stock of farm A, that these are the things to be taken from this table. Sales by farm A plus change in stock of farm A, because you have read that sales plus change in stock is value of output, that is one of the methods of finding the value of output, minus the intermediate consumption, that is here purchase by farm A. So you see the sales, that is 500, and change in stock is 20, then and purchase by farm A, that is the intermediate consumption, that is 320 here. So the result is 200. Value added by farm B, sales by farm B to general government plus sales by farm B to households plus change in stock, that is closing stock of farm B minus opening stock of farm B, minus the intermediate consumption. Here the purchase by farm B from farm A is the intermediate consumption of farm B. So you see the sales by B to general government, that is 100, and sales by farm B to households is 350. So this 2 is taken over here. Then this closing stock is 40. You see closing stock of farm B is 40 and opening stock of farm B is 30. So 40 minus 30 minus the purchase by farm B, that is intermediate consumption of farm B. So that is sales by farm A, that when farm A is selling to B, so that is purchase of farm B. So here it is 200. Purchase by farm B from farm A. So 350 plus 100, that is 450. Plus, that is 10, 460 minus 200, that is 260. Then gross domestic product at market price, value added by farm A plus value added by farm B. So if you add this value added of these 2 farms, so that is the gross domestic product at market price. So that is 200 plus 260, that is 460 crores is the answer. Then net value added at factory cost. So what was the formula? You might have read or you might have understood. Gross domestic product at market price. Here in this example, gross domestic product is given, already found out, minus this depreciation, that is consumption of fixed capital. From gross, if you minus this depreciation, we get this net domestic product at market price, minus indirect taxes, net indirect taxes, that is indirect taxes given over here. So subsidy is not given, so indirect taxes minus subsidy is net indirect taxes, but here subsidy is not given, only indirect tax is given, so minus net, that is indirect taxes. So the result is 265. So because GDP is 460 minus this consumption of fixed capital is given over here 120, and this indirect taxes, you see indirect taxes paid by indirect taxes paid by both the firms, that is 75. So minus 75 rupees 265 crores is the net value added at factor cost. That is NDP at factor cost also we can say. Then the worksheet number 2, that is question number 2 in this worksheet number 1. From the following data, calculate net domestic product at factor cost and net national product at factor. So the particulars are given, and in the economy there are 3 sectors. So primary sector, secondary sector and tertiary sector. The data of all these 3 sectors are given in rupees crore. So what is the question here? Find out net domestic product at factor cost and net national product at factor cost. So NDP at factor cost. So we have to take the sales of all the sectors, sales of all sectors minus opening stock of all the sectors, opening stock of all the sectors, because closing stock is not given, minus intermediate consumption of all the sectors, then minus consumption of fixed capital, because we have to find out the net value. So we are taking the total sales, so it is the gross item. So from gross item we have to minus the consumption of all the sectors. Then we want this value at the factor cost, so we have to minus or subtract this net indirect taxes of all sectors. So accordingly the values are given here, taken over here. 1000 is the primary sector sales, 1500 is the secondary sector sales, 700 is the tertiary sector sales, and the opening stock of all the sectors, you see opening stock of 50, 40 plus 20, 50, 40 plus 20, minus the intermediate consumption of all the sectors, that is 300, intermediate consumption is 300 by primary sector, 750, and 750 by secondary sector, and 250 by tertiary sector. This is the bracket over here, 300 plus 750 plus 250, minus this consumption of fixed capital, 10 plus 80 plus 60. So 10 plus 80 plus, and minus this net indirect taxes. So net indirect taxes is given over here, 50 by primary sector and secondary sector, that is 30, and tertiary sector no net indirect taxes. So 50 plus 30 plus 0. So the result is you see the result is 1560. You can get the addition, then subtract and get the value as it is given. I have done it over here, so you can find out the result is 1560 crores. Net national product at factor cost. We have already find out this domestic product. So if you take this, you want to find out net national product, so you have to add this net factory income from abroad to NDP at factor cost. So net factory income from abroad is given over here, 100 in the economy for all the sectors. So 1560 plus 100, so 1660. So this is the value added method of measuring national income. Some examples I have taken to clarify your doubt. A worksheet related to the income method. So in this worksheet I will discuss some of the questions relating to the income method, and we will find out the concept as it is asked by income method. So calculate NDP at factor cost from the following information. The information are given over here: rent, royalty, interest, compensation, employees, profit, mixed income. Rupees in crores, the value is given in rupees crore. NDP at factor cost, you all might have understood that all the factor incomes like compensation of employees, then operating surplus here, rent, royalty, interest and profit. These 4 if you add, this is operating surplus and this is mixed income. So as it is asked in separately, so rent, royalty, it is given in separate. That is rent, royalty, interest and profit, then compensation of employees, then mixed income. So this is operating surplus. Your concept should be clear. So this is given in bifurcation, that is accordingly you have to take 400 plus 200 plus 400 plus 200, that is royalty, interest is 500, profit is 500, and compensation of employees is 1000, and mixed income is 1000. So you have to add all this. Then the NDP at factor cost is rupees 3600, that is 3600 or 3600 crore. Then calculate GNP at market price. So the items are given in these are the items, and the values are given in rupees crore. So how to find out? As it is the income method, you see, find out the first you locate the income related items. So compensation of employees, then rent, interest is given, yes, interest, then dividend is given, Yes. Then savings of the private corporate sector. So you see, rent, interest and profit was royalty is not given here in this question. So what is given we have to take. That is, what is the income form? So rent, interest, dividend and savings of private corporate sector. So dividend and savings of private corporate sector gives us the profit item. So and royalty is not given, so no problem. Then mixed income item is given. So if you add these three, we get this NDP at factor cost. So to this you have to add depreciation. So that is GDP at factor cost. You have to add net indirect tax to GDP at factor cost. So GDP at market price. Then if you add the net factor income from abroad to GDP at market price, you get the GNP at market. This is the rule. So accordingly, the things to be written over here. So 100 is the compensation of employees, 1000 is the rent, interest is 200, dividend is 500, savings of the private corporate sector is 400, and mixed income is 200. Yes, you just tally whether I have taken the correct figure and put over here in this formula correctly or not. Then this depreciation value is 400, and then net indirect tax value is 900. Yes. Then net factor income from abroad, it is minus 20, so minus. So 3700 up to this, then minus 20, so it is 3680. So this is related to the GNP at market price, and the first one was NDP at. So this was related to the income method, and another question is also given here. Question number 3, calculate national income from the following data. National income means the concept is NNP at factor cost. So you might have remembered that we have discussed this in the national income and related aggregates, and the particulars, you see the items are given as it is income method, so income related item, and the values are given in rupees. So national income, that is NNP at factor cost, as just now I told. Then I already told you that first locate this factor income, that is compensation of employees, operating surplus, immediate income of the self-employed, and plus net factor income from abroad. So directly it is given here over here, compensation of employees, so 13,300, and operating surplus, that is 5,000, and mixed income of the self-employed, that is 16,100, and plus net factor income from abroad, that is 300. So you see the items like wages in kind is already included in compensation of employees. So separately it is given for confusing you, for creating confusion within you. Then so like that, this net exports is not a income related item, so it is given for this making you confused. Then gross domestic fixed capital formation, this is also not needed over in this because that is related to this expenditure method. So I think you are clear. Then calculate national income from the following data. So national income again, NNP at factor. So you see the items are given and the values are given in crores. So national income, you see compensation from employees, rent, interest, profit. So that is the operating surplus. Then mixed income is not given, so plus net factor income from abroad. So compensation of employees is 800, rent 200 is, you see, and then profit is 300, and interest is 100, plus minus 20, that is the net factor income from abroad. So it is 1400, so 1380. And here also some of the items are given to confuse you. As you know, depreciation is not required in this to find out this NNP at factor cost, because when you add this factor income, we get this value in net domestic product at factor cost. So net domestic product at factor cost plus this NFIA is an NNP at factor. So while you when you get the question, you first find out what are the items required for finding out this concept. Then what are the items not needed, so you don't bother about that. Worksheet related to the expenditure method. Worksheet on the numerical of the expenditure method. So here you see calculate GDP at market price. So the items are given and the values are given. GDP at market price, again in this method you have to locate the expenditure related items. So private final consumption expenditure, government final consumption expenditure, plus gross fixed capital formation, plus change in stocks, that is gross domestic capital formation. So these two, if you add this, we get this gross domestic capital formation, plus exports minus imports, that is net exports. So we need to add all these 4 to get the GDP at market. So that is given over here. 1200 is the private final consumption expenditure, government final consumption expenditure is 200, gross fixed capital formation is 300, and change in stock is 400, and that is export is 600 minus import is 500. So we get this result is rupees 2200 crores. Then calculate GNP at factor cost. So from the following information. So informations are given, and these values are given in rupees crores. So you see, this is another way to find out. You can take this serial numbers. What is required here? Now we require private final consumption expenditure. Instead of writing private final consumption, you can write the item number 8. Okay, you can. This is another way. Plus the item number 3, that is government final, and plus within bracket it is written plus item number 1, that is net domestic capital formation, plus item number 6, what is this? Consumption of fixed capital. So net domestic fixed capital formation plus consumption of fixed capital So that is gross domestic fixed capital formation. Then plus this within bracket again, plus item number 2, that is closing stock, minus opening stock. So change in stock. So this is gross domestic fixed capital formation plus this change in stock. That is gross fixed capital formation. That was the third component in the expenditure method to find out the GDP. Plus item number 7, that is net exports. Minus item number 4, that is net indirect tax. Why? Because we have to find out the value at factor cost. We need the GNP at factor cost. So net indirect tax to be deducted from this market price value. Then plus this net factor income from abroad, because we want the national income. So accordingly the values are placed over here in this formula, and the result is 2060 crores. So now the next, some of the questions related to all the methods. That is why it is miscellaneous practice. From the following data, calculate national income by income and expenditure method. So both the methods will be used, and to find out this national income, that is what? NNP at factor. So you have to see the items related to income and expenditure. We have to locate, and accordingly we have to put those items to get our required concept, that is NNP. So here also the items are given and values are given in rupees crore. So national income by income method, NNP to be found out at fact. So item number 4, you see item number 4 is wages and salary. Item number 8, that is social security contribution by employer. So instead of compensation of employees, that is wages and salaries plus this social security contribution by employer. So it gives the compensation of employer. Then item number 3, that is rent. Item number 9, that is royalty. Item number 11, that is interest. Item number 13, that is profit. So this from item number 3, 9, 11 and 13. So these are operating surplus. You see. Then minus mixed income is not given over here. Minus this item number 10, that is what? Net factor income paid to abroad. You know that we want national income concept. We need to add the NNP, that is net factor income from abroad. So that is, otherwise you can say factor income from abroad minus factor income paid to abroad. We get this net factor income from abroad. So here the factor income paid to abroad is given. So we have to deduct this. So that is why the result is rupees 1000. National income by expenditure method. So item number 6, you see private final consumption expenditure. Item number 1 is what? Government final consumption expenditure. Item number 7, you see gross domestic capital formation. Item number 14, what is that? Item number 14 is net exports. So these 4 are related to the components of expenditure method, and we get, if you add, we get this GDP at market price. Minus item number 5 minus 2. What is 5? Now indirect tax minus the item number 2 is subsidies. So that is net indirect tax to be deducted, because we want this concept in factor cost. So item number 5, that is indirect tax minus subsidies, item number 2. Minus item number 12. 12 is what? You see, consumption of fixed capital. Why? Because we need this value in net. So net value does not include this depreciation. So depreciation has to be deducted. Minus item number 10, that is net factor income to abroad. So accordingly the result is 1000. So by using both the methods, the same result, that is 1000 crores and 1000 crores. Because we need, we are calculating the same concept, that is NNP. Then Question number 2. From the following data, calculate GNPMP by income and expenditure. So you see, items are given. Again, you have to locate some of the income related item, and some items are expenditure related items. So values are given in rupees crore. So here GNP by income method, GNP at market price. So what is item number 7? Item number 7 is right. Item number 4 is what? Item number 5 is profit. Item number 16 is what? Item number 16 is compensation of employees. So these three, 7, 4 and 5, that is operating sum, and it is the item number 16 is compensation plus within bracket where it is written item number 8. You see, item number 8 is factory income from abroad minus item number 10, that is factory income to abroad. So net factory income from abroad to be added. So plus what is this item number 14? Item number 14 is consumption of fixed capital, because we need to get this value in gross. So when we add all this factory income, we get this net domestic product at factor cost. So we have to add this consumption of fixed capital to get the gross value. And we are adding this net factory income from abroad because we need the national income. Plus item number 9 minus 12. What is 9? 9 is indirect taxes minus item number 12 is subsidies. So indirect tax minus subsidies, net indirect taxes. Net indirect is to be added to the factor cost value to get this market price value. So the result is rupees 880. Then GNP at market price by expenditure method. So what is item number 15? So you see, item number 15 is private final consumption expenditure. And what is item number 1? Government final consumption expenditure. What is item number 3? Item number 3 is net domestic capital formation. And item number 14. What is item number 14? Consumption of fixed capital. So it will be giving you the gross domestic capital formation. Plus item number 11. What is item number 11? Exports. And minus 13. What is this? Imports. So net exports. Export minus import, that is net exports. Plus item number 8. Item number 8, that is factory income from abroad. Factory income from abroad minus item number 10, that is factory income to abroad. So this up to this you are getting GDP at market. So plus net factory income from abroad, it is GNP at market. So the result is 880 crores. So the same result. Then question number 3. From the following data, calculate national income, that is NNP at factor cost by income and output. So here some of the items will be output or value added related items, and some of the items will be income related items. So NNP at factor cost, you see item number 11. Item number 11 is compensation employee. Item number 12, that is rent. Item number 13, that is interest. Item number 14, that is profit. And item number 10, that is mixed income of the self-employed. So these up to from here to this, that is item number up to 10, that is related, these items are related to income method related items, and these if you add, that is compensation employees, mixed income of the self-employed, and operating surplus concept like rent, interest and profit here. So we get NDP at factor cost. Plus this item number 5 and minus 6. 5 is factory income received from the rest of the world, and item number 6 is factory income paid to the rest of the world. So item number 5 minus 6, it gives us the net factory income. So if you add net factory income from abroad to NDP at factor cost, as we have received this NDP at factor cost by adding this mixed income of the self-employed, operating surplus and compensation of employees, we get NDP at factor cost plus NFIA, we get this NNP at factor cost, that is national income. So here it is 460 crores. Then national income by output method, that is value added method. So item number 1, what is item number 1? Value of output of primary sector. Minus 3, what is this? Raw material of primary sector, that is intermediate consumption. So 1 minus 3, that is value added by primary sector. Like that, item number 2 minus 4. Item number 2 is value of output of other sectors, that is secondary and tertiary sectors, दोनों को मिला के ले लिया है. Then item number raw materials of other sectors. Item number 4, that is intermediate consumption of the secondary sector and tertiary. So here item number 1, that is here only 2 minus 4, that is value of output of other sectors minus intermediate consumption of other sectors, that is value added of other sectors, minus item number 7. Item number 7 is depreciation, because we need the net value. So gross value added concept is arrived over here. So minus 7, that is net value added at market price. Net value added at market price. So that is the concept up to this. Then minus 8. What is item number 8 here? indirect taxes, minus 9, that is subsidies. Item number 8 minus 9, that is subsidies. So gives us this net indirect taxes. So because this is the concept arrived at market price, so we need the factor cost concept. So NIT to be deducted from market price to get the factor cost concept. That is why it is done like this. Plus 5 minus 6. What is 5? 5 is factor income received from rest of the world, minus 6, that is factor income paid to the rest. So that is net factor income from abroad. So 5 minus 6 to be added. So the result is 460. So here the value that is NNP at factor cost by all the two methods is same, 460 crore and 460. Then the last question is, from the following data calculate national income, that is NNP at factor cost by expenditure and output. Some items will be expenditure related item and some items will be value added, that is output method related item. So NNP at factor cost by output method. So what is item number 4 here? The value of output of primary sector minus item number 7, that is intermediate consumption of primary sector, that is value added we are getting. Then minus, that is plus, here plus, item number 5 minus 8, what is value of output of secondary sector, minus 8 is intermediate consumption of secondary sector. That means you have to remember that when you are getting, we want this value added here. So value of output of primary sector minus intermediate consumption of primary sector, value of output of secondary sector minus intermediate consumption of secondary sector. Then here item number 6, value of output of tertiary sector minus intermediate consumption of tertiary. So up to this you are getting gross value added at market. Then minus 10, what is 10? Consumption of fixed cap. Okay, because we need the value in the net concept is required. Minus item number 11 minus 30. What is 11? The indirect taxes minus subsidies. So we have to deduct the net indirect tax because we want a factor cost concept. Then plus item number 14, that is net factor income, because we need a national concept. So we have to add this net factor income from abroad to this. So the result is 1110. Then national income by expenditure method, that is NNP at factor cost. So item number 3, what is item number 3? Private final consumption expenditure. What is item number 12? Item number 12 is government final consumption expenditure. What is item number 1 and item number 2? Gross domestic capital formation and net exports. These are the items related to expenditure method. So item number 2. Then minus 10. So up to this 3 plus that is item number 3 plus 12 plus 1 plus 2. So this is giving us GDP at market price minus 10. So that is 10, you see 10 is what? Consumption of fixed capital. So NDP at GDP at market price minus 10, that is item number 10. So it will give us NDP at market. Minus item number 11 minus 13. What is 11? 11 is net indirect tax and subsidy is the 13th item. So indirect tax minus subsidy, net indirect tax. From NDP at market price, net indirect tax to be deducted to get the NDP at factor cost. To NDP at factor cost, we have to add this net factor income from abroad, that is item number 14, to get the NNP at factor cost. So it is done in this way as the values are given. So the result is 1110 crores. So the important point is, by all the methods, if you want to calculate the same concept, the value will be same. So I hope I have clarified some of your doubts relating to the calculation of national income using different methods, and almost I have covered all the methods of measuring national income. So see you all in my next video. The last chapter for this unit I will be discussing in chapter 10, some exam oriented questions. Very soon I will be coming with this. So please give your feedback to my mail ID parsuram.shukla@gmail.com and my WhatsApp number 99386 49454. I hope you are benefited by this educational videos. So kindly like, share and subscribe so that the next videos reach you immediately. Thank you for watching my videos. I hope to see you in my next video. Thank you.